In this video, I'm going to talk about how I use margin investing and made over $500 in one day in the stock market. So I've been very fortunate to kind of start to get a better understanding and bearing of margin investing, and a lot of people don't necessarily know what this is. And of course, you should be concerned, right, in regards to margin investing and if you should use it or not use it. But in this video, once again, I'm going to show you guys how I made over $500 in the stock market using margin investing in one day. Listen, if you're new to the channel, my name is Dwayne with My Investment Journey, and on this channel I talk about how to start investing in the stock market and I show you my investment journey. So if you're new, be sure to subscribe and click that notification bell so you don't miss a thing. Okay, so when it comes to margin investing, the simplest way to understand what margin investing is the fact that whatever you have invested in your brokerage account, let's say it's $10,000, margin investing is where you're able to borrow money from that particular brokerage to buy more shares of what you currently own or buy different shares of something you don't own already. But it's basically borrowing money from the brokerage. And of course, there's going to be a percentage or what they're going to charge you in regards to interest. For example, I use Robinhood, and currently at the making of this video, the interest is 7.75%. I'm smiling because I know that the Feds are going to raise interest rates on the 26th, which is tomorrow, which by the time you guys are watching this video, I think it will be the 26th of July. So I'm smiling because, of course, it's 7.75% right now in Robinhood. So basically, if you have margin invested enabled on your brokerage account, it will give you access to more money. And of course, you can use this for good if you know what you're doing, or you can find yourself in a pickle. So recently, I've been dabbling with margin investing in my Robinhood account, and I really pay attention to the stock market, and I really pay attention to certain stocks, and I kind of see the behavior that the stocks do as well as the stock market as a whole. The more you start to pay attention to this, and of course, nothing's going to make you pay more attention to this than having your very own money invested in the stock market. When you have money invested in the stock market, you're definitely going to pay attention to what's going on with the market and it going up and down. And the more you spend time watching the market or even watching one particular company, you don't have to be a genius. You don't have to try to understand the entire stock market. You can just understand the behavior of one stock or just the psychology of the stock market. And what I mean by that is the fact that the market doesn't continuously go up or continuously goes down, right? There's not going to be 5 days in a row where the market's gone up. Like, that's pretty impossible. Of course, I'm sure it's happened, but generally it's not something that normally happens, okay? So right now you're looking at my Robinhood portfolio on the screen. You can see it's currently valued at $288,000. This is live right now as of the making of this particular video. The market is open, so of course you're going to see that it's going to fluctuate, okay? So I've been, like I said, using margin investing on Robinhood. So as you can see here, currently it says my buying power is $68,000. Once again, that's all margin investing. That's not my money that I have sitting in this particular account, okay? So I'm going to show you guys where I was able to make over $500 recently trading Triple M, okay? Now this is a position that I own because of margin investing. And so I've been able to, like I said, I'm dabbling and kind of learning. I've been very successful, and of course I'm sharing my wins with you guys. I think when it comes to investing in general, you can have peace of mind when it comes to investing in solid companies that you pretty much know that they're not going to file bankruptcy in your lifetime. So from that perspective, if the company's not going to go belly up, the stock should be okay. So like when the price drops, instead of freaking out, it could be an opportunity to grab more shares and bring your average cost lower, okay? So I'm gonna go ahead and show you guys here with my position with Triple M. So I currently own Triple M, and as you can see, it's trading for $109.74 right now. My total return with Triple M currently is I'm up 13%, which is $3,000. My average cost per share is $96.82. Now I have bought and sold and bought and sold. So what I'm going to do is I'm going to scroll down and show you guys where I'm talking about where I used margin investing, and I'm going to show you kind of how it works and the interest that I'm, basically paid for this particular trade. So as you can see here on July the 6th, you can see that there was a limit buy, and at the time I bought 200 shares for $95.94. And then right above that, July the 7th, you can see that I sold 200 shares, and at the time it was $98.84. So you see there is a total here, which at the bottom you have $19,188, and then right above you have $19,766. So the money that I borrowed in regards to margin was the $19,188. So let's do the calculator here, and we'll do $19,188. We're going to multiply that times 7.75%, so that's going to be 0.0775%. That's going to be $1,487 for the entire year if I were going to be borrowing that money from Robinhood, the $19,000 from Robinhood. Okay, I'm going to divide that by 12 because 12 months. So that would be $123.92 that I should be paying in interest to Robinhood. Now, of course, you can add money to your brokerage account monthly in order to be paying that interest, or if you don't add money, it's just going to continuously grow the balance that you're currently borrowing in regards to margin. So initially I borrowed $19,188. After 1 month, if I don't add $123 to my account, then it's going to add $123 to the money that I borrowed from them. Okay, so there's a couple of ways you can kind of work it. So as you can see, it's $123.92 for the entire month if I were borrowing $19,188 from Robinhood. Now, I'm going to divide that by 31 days because there are 31 days in the month of July. So I'm going to divide by 31, and I get $3.99. Okay. The trade here on July the 6th, I bought it. It was 10:12 a.m. You can see here 10:12 a.m. And then right above on July the 7th, when I sold it, it was 11:55 a.m. So let's say that it was 2 days, because I'm not sure if it's a 24-hour thing, right? So we had 10 something a.m. and I sold it almost at 12 o'clock. So let's say it was 2 days. So I'm going to do the $3.99 times 2, because basically let's say that I borrowed the $19,188 for 2 days. So basically $8. Let's round it up to $8. Okay, so it cost me $8 to borrow that money for 2 days. Now let's see how much profit I made. So I sold for $19,766. I'm going to subtract how much I borrowed, which was $19,188 at the time when I bought those shares. And so you can see $578. There's a $578 difference, and I'm going to subtract the $8 for the interest. So that's $570 that I made using margin investing, and it took 1 day to do so. Now, the reason why I was able to do that is because, once again, I'm paying attention to what's going on with my particular stock that I'm invested in. And the fact that the price dropped as much as it did, once again, my average cost is $96.82. And as you can see here, when I grabbed my shares initially, the first 200 shares that I grabbed, it was for $95.94. And then I sold it for almost a $3 difference, almost, okay? So I was able to make $570 by simply, once again, paying attention and not necessarily timing the market. I don't want to say that I timed the market. I'm not trying to make it seem like I'm a genius or anything like that, because I'm not, okay? But what I do understand, once again, the more you pay attention to the stock market, you understand that, throughout the day, that the stock market or your portfolio is going to go up and down. I mean, here's a prime example. We're looking at my portfolio right now, and this is live, right? So let's see. For me in Houston, the stock market opens at 8:30 a.m. My portfolio was valued at $289,000. Okay, and then as you can see, by 8:50, it was valued at $288,000. You can see even over here at 9:55, it was at $287,155. Of course, you can see here at 10:45, it was up again. So even in one day, the market, or at least your portfolio, is up and down. And most stocks are like that as well. So once again, the more you kind of pay attention and take into consideration certain things, you can start to understand a little bit more how the market works. Now, depending on your risk and tolerance level, you can then choose to grab some more shares. I've been very, very fortunate where I've been able to grab more shares and bring my average cost down, even with this particular company, 3M, right here, right? So you see it's at $109 today, and the reason why it jumped up $5 today is because of positive earning reports. So it went up quite a bit. Okay, just today, $5 in one day is a lot for this particular company. But if I show you guys some of my history here, right? If I click on Show More, you can see that some of my buying and selling, right? So you can see here the price for each share has been all over the place. You see here March 30th, okay, you can see $102.66. Then of course you see there's a sell March 31st because it went up a little bit. I wanted to get some profit. Then you can see another buy here, $101.98, and then you can see that I sold. Right, I sold some up here, $102.40. Then you can see that I bought some, $101. I bought 100 shares, and then right above that, you can see that I sold. Now, the purpose of me showing you guys this is, okay, I was kind of dabbling, right, using my margin investing to buy and sell and buy and sell. Also, I'm using margin investing, and I'm bringing my average cost down as well. You can see another right here, May 9th, I bought 200 shares, and it was at $100.92 at the time, right? May 9th. You can see here on May 16th, I bought some more shares because it was $98.46 at the time, right? Because to me, it's a no-brainer. I'm bringing my average cost down, okay? Then on May 17th, I sold the 75 shares again, made a little bit of profit here, right? As you can see, bought at $98.46, sold at $99.95. That's $1 and almost 50 cents price difference, right? So that's a profit there. Then, of course, you can see here I bought some more shares, 200 shares at $97.72, right? And then you can see I bought some more shares right above that at $93.48. Now, the reason why I'm doing that is to bring my average cost down, right? And then, of course, you can see that I sold some shares here, $200, right? 200 shares here. You know what I mean? So I've been doing that. And of course, I'm doing that because I'm trying to accomplish a couple of things, right? I'm trying to bring my average cost down. And if I can take some profits off the table while doing that, it's a win for me. So I'm using margin investing. When the stock is trading lower than my average cost, I'm grabbing more shares. And so, for example, let's say, I bought it and it was $100, and then now it's trading for $95. Okay, if I can grab 200 shares at $95 and then sell those same 200 shares when they're $97, okay, I'm going to get a little profit, but I'm going to bring my average cost from $100 down, okay, because I have shares here at $100 and I just bought some shares at $95, right? So now I'm going to sell the shares that I bought at $95 when it's $97 or whatever, whenever you're comfortable. And so I make a little profit and I bring my average cost down. So I've been able to do that successfully. And of course, you're not going to always have wins in the stock market, but I'm not trying to be, a genius and read charts and recognize patterns and all that stuff. The only pattern that I'm recognizing is kind of what's happening with the stock and what happens over time with that particular stock. But I'm not studying a chart, and I'm not saying that, that's right or wrong. Okay. People pay a lot of money to learn how to read charts and candlesticks and all this stuff. And of course, if you're able to be successful at that, then good for you. But if you think about it, when you're searching YouTube, you don't see thousands of people that are successful in regards to reading charts, right? You're lucky if you can find hundreds or even 100 people that are consistently killing it in the stock market when it comes to trading. So I don't waste my energy and time doing that, just because for me it's too stressful, and I'm just not that good. Anyway, that's going to be it for this video. If you're not subscribed, be sure to subscribe. Give the video a thumbs up as well. It helps the channel tremendously. All right, once again, my name is Dwayne with My Investment Journey, and I approve this video. I'll see you in the next video. Until next time, take care and be blessed. Peace.